Yes, this is the Mark Haney Show, and today's show, we're going to have one of the founders that the Growth Factory has invested into. As some of you know, the Growth Factory is a startup accelerator with an accompanying venture fund, and we invest into local startups and help them accelerate their growth. And today we're going to share the story of OpenGrants. And joining us is its founder, Sedale Turbovsky, and OpenGrants is building a unique platform that helps the grant-making process run a lot more smoothly. So stick around and hear the story of Sedale and OpenGrants. And then at the end of the show, I'm going to give you an update on what's going on with the Growth Factory. Exciting stuff on the horizon with the Growth Factory. So stick around, my friends. And now it is my pleasure to bring on Sedale Turbovsky. He is the founder, CEO of OpenGrants. How you doing, Sedale?
I'm fantastic.
Well, you and I have known each other a while. You started your business, how long ago was it?
This particular, we've known each other longer than this business.
Okay, yes.
But yeah, this particular venture, we incorporated in late 2018. So into September 2018 is the official date on the paper when we were like, this is a thing.
Okay, so you're thinking about starting OpenGrants. What inspired you to make the leap and to really go after this one specifically?
I really just felt strongly that, grant funding is this really unique vehicle for capital. It is altruistic in a sense, right? And venture capital is great and it has its place. All the different kinds of capital has its place, but grant funding is this thing that we use it to house the homeless. We use it to help veterans. We use it to cure cancer. This is what funds research and all kinds of really interesting things. And unfortunately, unlike getting investment from Growth Factory, it was just this conversation and we all knew it was happening and it was great, but it was a really straightforward process. Whereas getting a grant is just this archaic, weird, arcane, dark arts thing. It's terrible, and yet this money is so useful and so important. So.
Yeah, and just for maybe somebody who's tuning in, is a grant is, you don't have to give it back. So if the Growth Factory invests into OpenGrants, the company, we get a little piece of equity. If somebody loans you money, you got to pay it back. But a grant is a gift. Am I right?
Yeah, grant funding is non-dilutive. It doesn't it doesn't reduce your equity, your ownership of your thing, and you don't have to pay it back. So it's the cheapest money you can find. And it's also, unfortunately, just up until OpenGrants, been very hard to get.
Yeah. Well, so one of the things that people, I think, don't realize a lot of times is that they're eligible for grants and they just don't realize it. So where does OpenGrants, so let's say I'm a startup or I'm an entity that wants a grant. Describe to me how the product works.
Yeah, so OpenGrants as a platform is really useful because you just create a profile on there. And basically, once you've created that profile, two things happen. One is you can go talk to grant consultants on the platform. And those folks are super experienced. They have all the knowledge you need, and they can help find grants for you. But the other cool thing is that you start getting emails of hey, here's these grants. They're perfect for your company. These are things you should be applying for that you're eligible for. So you spend 5-10 minutes maybe if you're really unorganized, and all of a sudden now you're like, oh, I could go get grant money, and these are the ones.
Okay, so how big are these grants? Because a lot of times the trouble ain't worth the trouble sometimes, but
Yeah.
if the grant's big enough, hey, it could be worth really investing some time and effort into getting a really solid grant.
Yeah, and they do run the kind of the gamut of size, right? So on the small end, you have grants for maybe $5,000. So we actually were very excited. We just partnered with a company called Builders and Backers, and they do $5,000 unrestricted, no strings attached grants to entrepreneurs, so that they can do their first experiment. Not even getting the business started, but hey, can I make money on the internet? Does anyone want this weird widget that I'm building, right? That kind of thing. So there's that size. And then all the way at the other end, you have $90 million grants to improve infrastructure for your city. So there's a huge spectrum of opportunity here. And, what with the pandemic and the new infrastructure bill and everything else that's coming out, there's more grant money than there ever has been in the United States. This is the first time the U.S. government has invested this much money outside of the military into like domestic affairs in decades. So it's really
this
exciting.
is kind of like matchmaking, if you will, a platform that match makes to a certain extent the person who wants the money along to the person or the group that can grant the money, that has all this money. So can you run through this for me a little bit? I know startups need grant money. Nonprofits, who are the people that are most likely to want a grant?
Yeah, I mean, local government uses cities, states.
The government wants to go get a grant from a different government entity potentially.
Yeah,
Okay.
all the time. So
Right.
that's a big one. The government typically like grants are their lifeblood. And then you have nonprofits who are getting grants from foundations and maybe the government as well. That's another effect of the pandemic. A lot of nonprofits couldn't run their galas and their fundraisers that they usually did, and a lot of them have just done that because it's way easier than getting government grants or other kinds of grant funding. And so now they're on the hunt. And then startups as well. And really anyone in between. I just saw today a new grant that came out that was for Latino restaurant owners.
Okay.
I mean, there's grants for everything. As it turns out, a lot of people want to give money, and a lot of people want to invest in their communities or invest in things they're passionate about. And a lot of times they set up grants to go do that. And like I said, it's altruistic and really well-intentioned, but it was really hard to find all this stuff. And that's and then really hard to navigate it once you got it. And so that's why we built OpenGrants, is because there's so many people who want to do good things. And then on the other side of the table, there's a lot of people trying to do cool stuff. You match them up and magic happens.
Well, I get that the government has money that they want to put to use in a positive way. Who are these other entities or people that have all this cash that they want to give to startups? Or probably don't have individuals giving money to governments, do they?
Not so much.
Yeah.
No, we already pay taxes,
Yeah.
so I think we're all good on that one. But no, we have there's high net worth folks who give money to foundations, and then those foundations deploy grants. And it's actually one of those really interesting things, right? When you think about a foundation, the reason it's so inefficient is because really the foundation was always set up for the high net worth people to just give them money as a tax advantage structure. And they really haven't, a lot of them really haven't built out the tooling to be efficient about then passing that money on and giving it as grants. And so it's something that we're working on at OpenGrants is like, we love working with foundations. We're working with the Stacks Foundation currently and a few others to help them deploy grant money a little bit more efficiently. We're doing some kind of early proof of concepts on that front. So really, you have foundations and other people who are giving to foundations, and usually that's how grant money is happening. And there's our family offices and other groups that do set up grant programs.
So you're a newer company, and I've talked to some other companies that have platforms not so dissimilar to yours, and there has been this chicken or egg thing. So if a lot of people that want the grants but no grants, I can't find the grants. Which one was tougher to find? Getting the grants, the people making the grants, or the people that need the grants?
Luckily, we're in a really unique situation where a lot of the people who have the grants, and in particular the government, right? That's $750 billion in the United States from the federal government alone. I mean, that's all public record. So we were able to just go get all that data really quickly and easily. And so when we were like figuring out that like balance of effectively like the marketplace, right? That was pretty straightforward for us.
That's just a tech job.
Yeah.
Have the technology go out and grab the data.
Yep. Yeah. And then on the other side, luckily, the sell here is really easy. It's like, we're not trying to like get people to take COVID tests or get vaccinated, right? It's like, hey, you want some money that you don't ever have to pay back? Like, what kind of, like, that's the best pitch you could, we would have to go into a different line of business if we can't sell that. So that was also not so hard. I mean, we have great attendance on our webinars and such because we say, hey, you want money? and they're like, well, yes.
Heck yeah. So how do who pays? So here you're in the middle. Walk us through how the money changes hands, if you don't mind.
Yeah. So typically there's two ways. One is that someone goes out to go find a grant and they along the way discover that maybe the grant application is quite complex, or maybe they need some kind of introduction to the grantor. So say you're going to try to get a grant from the Gates Foundation or the DoD, who gives tons of grants out. In both cases, you kind of want to know somebody there. Mm-hmm. That always helps, right? It's like a difference between a cold call and a warm introduction to a customer. And so in that case, you might hire a consultant. And our consultants on the platform are all private contractors. We've curated them and organized them so that you can go on our platform and say, hey, I need to talk to the DoD, and you can find like 3 or 4 who like know the DoD and they know the people that you need to talk to. So you might hire them. If you pay them, we have a marketplace. So basically we take 20%. So whatever you pay that consultant, we take 20% of it. And that's how that part works.
Okay, so you broker the relationship with the expert or the consultant. So I get that. And you take a percentage. What about the people that want to have access to the grant data? Do they, the end user, if you will, or the recipient of the grant, do they pay a subscription fee, or how, I mean, because
yeah,
okay.
exactly. Yeah, they do that exactly. They pay a subscription fee to our data, and then we have an API that allows them to configure. They can look at how did this money get used, or how many people looked for this, or blah blah. So we have a really highly configurable data product that we sell. So those are our 2 main revenue drivers. In fact, are that transaction that I described, and then just actually we take all the platform data in aggregate and push it into a big old data lake, big database, and say, hey, here you go, and people pay for that.
Well, you're making it sound like it was kind of easy to do. What's been some of the big hurdles? Because all startups have them; they've got to.
I mean, it's a thing. There's definitely several times we've just looked up and been like, yeah, now we know why no one has done this before. There's certainly, just the quality of the data in the first place, right? Like, it sounds easy. You go out and get all this public data, but really, the data is all in different formats. It's stored in weird places. It's not updated correctly. Sometimes the data itself isn't correct, right? So I remember we talked, the government built a new platform called BetaSam, and the Air Force was using it, and they were putting in just bad data. And we called the Air Force contracting officer and we said, hey, why are all the contracts so weird and they don't make any sense? And he's like, we actually don't know how to use this platform, so we just sort of type whatever and call it a day. It's like, all right. So, those kind of things occur just in any large bureaucracy and large ecosystems like that. So there's a lot of hurdles in terms of like the data quality. And then, fundraising is always a challenge and an exciting adventure. You talk to a lot of investors, you hear all kinds of different thoughts about how you should build it and how you shouldn't build it and what you should do. So that's always been fun. But I'd say one of our biggest challenges has frankly been getting all this data to like harmonize and be coherent.
So that the customer experience is really smooth and seamless, and you've got good customer. What's the feedback from the customer? Are they, do you have any raving reviews of like, oh my gosh, you saved my company, or you saved my nonprofit, or thank you?
Yes, we have some great reviews and testimonials now. There's certainly been, when you talk about customer experience, they always say that if you ship something you're not embarrassed of, then you waited too long, right? Yeah. Well, we definitely like that. In fact, one of my mentors, that's his feedback always has been that you tend to push things before they're ready. And I'm like, okay, well, yeah. But it's a fault of mine, certainly. And our very first iteration of the platform was awful. It was frankly very terrible.
Your MVP was terrible.
It was really bad. And a testimony to like how bad the industry is that we have users who are still on our platform. They've stuck around this whole time.
Hey, I don't care. It's better than nothing.
Exactly.
Better than
better
what
than
would
what's
they do
out
before?
there.
You get a like a paper, or you just get on an individual website and look for grants. I mean, that entity by entity.
Yeah, there's some central aggregators out there, but a lot of it's really bad, frankly. So that was, user experience and dialing that in. We've thrived on that. And so when you talk about reviews, one of the things that we've done for a long time is we just run surveys and interviews with our customers. And we spend a lot of time listening to them. And we just launched a whole new brand. We're super excited, not brand, but a new brand refresh. So new logo, new colors, better UX and UI. And all of that's been based on the fact that, really early on, we had users say, this is awful. This is terrible. This needs to change, that kind of thing. And so now we have users who are like, this is amazing. We had such a great experience with your consultant. We had a great experience with the platform. This makes so much sense. I feel joy. That's been our vision, right? Is we wanted to inject joy and hope into this process that frequently is just so awful that people hate it.
Are more people using it on a mobile device or a regular computer? Which are people using more of? Do you know?
So yeah, we do know. So actually 75% of our users use a desktop or some kind of large screen device.
In this kind of business, it would be that.
Typically they're like sitting down to do some work. They're not like on the train checking out, or whatever, right?
Right.
It's very much a business kind of related sort of focused app, as opposed to, you might like want to text someone or, that kind of thing. So
Yeah.
typically our users are on some kind of desktop.
Yeah, and then you notify them with one. They put in some kind of criteria about the type of grants that they might qualify or that they might be interested in, and then do you notify them so that they're, it makes it kind of easy for them?
Yeah, we send them an email, and they can also opt into like text updates,
Okay.
which is cool. And then, the exciting thing is they don't even have to put in that much information about exactly what they think they might be qualified for, because we found that a lot of users don't even know that. We just have them upload give us 5 paragraphs give us your executive summary, effectively. That's what we ask for. And then we do a variety of sentiment analysis and string analysis on the words and the things that are in there. And that's how we start to match them to funding opportunities. Because along the way, we've learned even if we give you the best search engine in the world, you're not going to understand how to speak government or speak foundation and figure out what grants might be a good fit, because the language that's used in this industry, that's a whole different topic, but it's awful and very bureaucratic.
The language, they've got special grant language.
Yeah, it's more like special government language,
Oh,
right?
government,
But you might say, hey, I'm a small business building, I don't know, building better charging for cell phones, and the government's out there saying, hey, we want
sustainable
yes,
this or that.
They have some titles like sustainable battery technology for blah blah blah, and you're like, well, this is actually cell phone charging.
Okay, I understand. It's a little bit, some of the companies I've been around, they do government contracting. It's not the grants, but they want to get the, they want to go get a bid and go win a bid, do some business with the state of California or some other government agency. And it can be the wording and reading, multiple paragraphs full of gobbledygook to try to figure out that it's a chart, it's phone chargers. Oh, okay, got it. So in thinking about that, as you think about your roadmap, obviously the grant business is taken off. Is the roadmap for growth, is that just doubling down on what you're already doing, or is it broadening out the experience? What comes to mind is doing government bids or other ways that people might want to get data like this.
Yeah, our vision for the future really is to transform the way grants are deployed, in effect, because we don't see you really can't. It's not sustainable to keep asking people to submit 80-page applications, and frankly, grants we see them going the way that loans have gone, right? So now when the modern loan process, if you're a startup or a company and you're running on Stripe or QuickBooks, all right, which are very popular, they just email you, right? After a while, they just email you and they say, hey, we've been looking at your finances. We know exactly what our risk profile is here and your risk profile, and we're going to lend you $100,000 at X. This is your interest rate. And they just send you an email and you click on it and then it just shows up in your bank account. It's fantastic, right?
Take the people out of the equation because we're getting used to not talking to people. You don't need to jump on the phone with the person on the, the entity on the other end.
Well, and it's such a secondary, and this is part of our brand and our vision here is the money is so secondary in all of this, right? We're trying to fix the climate. We're trying to build better stuff. We're trying to house veterans. We're trying to do all these important things. And then back here, there's trillions of dollars floating around and really but it's so secondary. We just need the money to do stuff, but the stuff that we're doing is so much more important.
Yeah. You're probably saving, people. You're helping right now. We're having trouble creating efficiencies in many ways. Not having trouble. Let me rephrase that. Look, there's a shortage of great workers right now, and so you got these people are having a hard time getting people to just answer the phone on the other end.
Yeah.
If you can get it to happen more automated, boy, huge.
Yeah, and I always think about we've seen different industries transform like this, where all of a sudden you don't have to spend it's something I did the other day. I had an investor in Chile who wanted to read our memo. And instead of having to spend a bunch of time translating a memo, I literally just clicked on Google Translate in Google Docs. It spit out a 40-page, perfectly translated. It took me 10 minutes to clean it up. And then I got to spend the time, instead of having to deal with that and then explain things to the investor, I just got to spend the time prepping and then talking to the investor. It's so much better, right? My use of time should be spent crafting this story and doing my job, not doing this secondary thing that doesn't really relate to my job, but happen to be in the way. And I think that's our vision really, is to like create on-chain identities for people within our network. Like eventually we want to roll out these tools on our network to allow people to just have a single identity, and they would be able to upload information about the impact they're creating and the things they're working on. And then the grantors, much like the loan, the people who lend money today, would just be always aware, like, oh, right, this company is doing great research on new cancer drugs, and we're just going to give them, $100,000 here and there to like make sure things keep moving. And if we see them go way off course, then maybe we'll stop funding them or talk to them some more. But we really see it transforming from like this very bureaucratic, slow, inefficient process to really like the same way you get a loan from QuickBooks these days.
Right.
Yeah.
Interesting. Okay, so it's on my list to talk to you about crypto funding. What's that?
Yeah,
I mean, I have it down. I don't know what you're talking about. What is that?
So that is part and parcel of kind of this concept of the future, right?
Okay.
Of being able to, one of the things that we're looking at is how can we allow people to, for example, deploy aid over crypto rails. So let me tell you a story about the State Department, the United States State Department. They move money around the country and into foreign countries on pallets, in backpacks, just like
green dollar bills.
Yeah,
like
they're just packing up bales of money and like shipping it places to do stuff. Now
I could see in the CIA or something like that, but
and then they come back and they're like, oh yeah, some of the money got lost in the this seems fine. And so instead of doing these things, and then the problem is like. So if you think about a low resource area where they've just had a natural disaster or man-made disaster, maybe the government's not there anymore, maybe there's no central banking anymore, and so you can't trust the banks. You still need to move money into the country. What do you do? Well, a lot of these places actually still have connectivity, and then like the NGOs on the ground have connectivity as well. And then you start to think about this whole like cryptocurrency revolution where we're using wallets and on-chain transactions to be able to move money. And so this is where it gets really interesting, is we could take all that aid money and move it into digital wallets into these low resource areas. So all of a sudden you're getting people the resources they need, you're doing it really efficiently, and you're doing it in a highly traceable way. So you don't lose your money.
Yeah.
And so that's, one of the like exciting tools that we see ourselves deploying in the future. And we really do it. Like our vision is not just the United States, but global.
So building out that money, obviously there's risk in any kind of transaction like that. But if you've got the technology to eliminate some of that risk, now how do you get paid in that scenario? Do you take a percentage?
Exactly. Yeah. So we'd envision just taking a percentage of the transaction.
Your payment platform, basically.
Exactly.
Yeah.
Yep.
Well, you're already doing that when you're with your workers, not your workers, the consultants and the grant writers. You're already a payment platform of some kind.
Yeah, and
do you do crypto on that?
We do. We do something really exciting. It's not actually crypto, but it is tokenized securities. So we do have this vision of building a company and making sure everyone is aligned. So you don't have an Uber situation, right? Like imagine if Uber had just been able to like quickly give a little bit of equity to all their employees, probably wouldn't end up getting sued. Right? Like people would have been happier. And when that big windfall came and the IPO happened, everyone would be like, oh, this is sweet. Right. And imagine even better that Uber, before that windfall, not only did they give their employees equity, but they made it liquid so that within a year, those employees could pull it out and maybe buy the car instead of just renting it from Hertz or something terrible. And so that's what we're doing. Our consultants on the platform, and frankly, anyone who works for us, has the opportunity to actually earn equity. So we've tokenized some, not all, but we've tokenized a small percentage of our securities. And so we allow folks to be able to receive those tokens as part of compensation. And so they can do two things with that. They can just hold it. And they can also, after a year, they can trade it or sell it, and like they can use that as liquid. So,
oh, that's interesting.
Yeah.
So, well, you mentioned Uber is kind of an interesting. The Ubers of the world have been battling to not call their employees. They wanted to be subcontractors so they can. Get around some of the regulations associated with having an employee. Are yours technically employees, or are they're independent contractors?
Yeah. So we do have employees. We're going from 8 to 11 right now, which is super exciting. Whole different discussion. But we've spent a lot of time with our attorneys making sure that everyone's well taken care of. But certainly, like all of the consultants in our network are all private contractors.
Yeah.
But they do, everyone from people who find bugs, like bug bounty programs, to contractors, to like outsourced developers who want, some equity. Our vision here is building a community where the incentives are all aligned, moving in the same direction. And it
Makes sense.
motivates people, right?
Yeah.
You're like, all right, well, we're all pulling in the same way and we all have these incentives. And so everyone's a little more
Is
harmonious.
that a roadmap is that on your roadmap, or does that exist? Do some of those incentives, do they exist today?
Yeah, the incentives exist today. In fact, not only can our contractors get access to tokenized securities as part of their compensation, but they also have access to healthcare benefits and a variety of other things through a DAO that we partnered with that basically achieves collective bargaining the same way you'd get in like a big business that can negotiate good rates for healthcare. But this is a decentralized autonomous organization called Opolis. And so we're super excited. And it's these really unique incentives that allow you to, like, as a private contractor, and I spent plenty of years as a contractor just doing my own thing. It would have been so cool not to pay like through the nose for healthcare. And that's what the people who are on our platform have the opportunity to do. So it makes the platform stickier, but it also does something really good for our community.
And then these tokens that you mentioned, that's like having equity in the company?
Yeah. It's a tokenized security. We white label it. We white label the technology itself from a company called Fairmont, and we spend a lot of money on our attorneys. And
so they have a little piece of action. Well, you mentioned we were talking about fundraising a little bit. You touched on it as a hurdle, which it always is. One of the things that I know you have done recently is you started something on a WeFunder campaign, and I think that might be an educational thing for maybe some of our listeners. Is how does that work, and why did you do that?
Yeah, and so that's a really exciting part of this whole like community story, is that we see ourselves as building a public good, and unfortunately, even in the best of circumstances for investors, you have to be an accredited investor typically to invest in an early stage company like
and
ours.
maybe for our listener out there. An accredited investor is a high net worth investor, and so you're saying by doing a crowdfunding campaign through something like through WeFunder, is you're democratizing it. You're making it so somebody can, maybe a small guy, the regular Joe Public, can go ahead and invest and be a part of it.
Exactly,
Okay.
yeah, and they can invest in the same vehicles that would be accessible to an accredited investor, but they don't have to write such a big check, right? So the minimum on WeFunder is $100, which I'll definitely throw out there is sometimes that's even a hurdle for people, and that kind of goes to the point here is that the way that a lot of people have made money and continue to grow their wealth is by investing, right? You read these stories of like Peter Thiel, who like has like a $15 billion something Roth IRA, right? And he like put all this like all these early stage stocks in there, and and you think about that and just how far removed that is from like the experience of just like the common person who, I read this article the other day that like they said, hey, they burned through their entire life savings during the pandemic because they didn't have jobs, and it was like $5,000. I was like, how is that somebody's life saving? Like, that's so crazy.
You talk about this. I mean, this is an issue that is obviously it's near to my heart as somebody who has a venture capital fund and does angel investing and that kind of thing. And to think that you have to be high net worth to get in that club, it doesn't seem right. To me, it's like, I'm not going to say I feel guilty. I just like the laws need to change. Yeah. Thank God that there is crowdfunding regulation or laws that allow for some people to get in, but most people aren't using WeFunder, right? Most of the people that are out there raising the big bucks, they're not using the WeFunder. So people come in for $100. The other thing that happens that's interesting that I think, and it's part of the Growth Factory's concept, is by having people with skin in the game. So somebody throws in $100. I got some skin in the game. Now I want you to succeed. How do I help you? Right?
Yeah.
That's a cool thing.
It's so cool. And the cool, like, it's really exciting because it goes back to that incentives idea, right? It's like we want our community to be incentivized. We want to, ideally offer an opportunity for you to create a lot of wealth. Ideally, it could all go sideways, but ideally it goes really well and everyone makes some money, and that'd be really neat. But, on the other side of it, the reason that it's so exciting is that all of a sudden we have our users. We have users who are on the platform who are now also investors. And we invite them to our Discord channel. We bring them in. We say, hey, how do we make this better? Like, what do we need to do? and they give us all that feedback. And it goes back to what I was saying earlier, is like early on as a company, the whole reason that the platform looks the way it does and our branding looks and feels the way it does is we talk to our customers, our users all the time. We said, hey, how do we do better? Like, how can we be better? And this is just like this feedback loop. And this makes that feedback loop so much more like real and vibrant and cool. And so we have people joining and signing up. So if you go to WeFunder and type in OpenGrants, you can find it, you can invest. It's very cool. And it goes to the heart of, we want to really democratize access, not only to grant funding, but also the opportunity to like build businesses and all these other things. And a lot of that is accomplished initially by these very altruistic capital vehicles, which is like grant money is like the leader of that. Like that's how we make it happen.
You're in the same space, just matchmaking in a different way. Now, in terms of just for an education for our audience, so WeFunder, there's limitations with WeFunder. It's all part of the regulation, but the minimum's $100. Is there a maximum? There's a maximum that you can raise using WeFunder?
Yeah.
So for the startup out there, it's like you can only raise a few $1 million, right?
$5 million. Yep,
Oh, $5 million.
So
So you get a $5 million raise. Okay.
it's certainly not nothing, but it's not.
It's a lot to me.
Yeah, you see these, funds out there, or startups raising like some $20 million or $100 million rounds. So you're not going to be able to do that on WeFunder, but you can raise up to $5 million in an individual offering. So each one, you file your paperwork with the SEC, you get everything set up, then you roll it out to the public and you raise. And the cool thing about WeFunder too, for founders who might not know this, is that instead of like as a startup, you have this thing called a cap table, and it's got all your investors on it, right? And the cool thing about WeFunder is they manage all that for you, so it just rolls up into one single line item on your cap table, so you don't have to deal with, maybe you have 200 people who invest.
So it looks like one investor on your cap table.
Exactly.
On your investor list, it looks like one. It's WeFunder. Okay, so can you care if I dive into it? Like, how big was your raise, if you don't mind me asking? Okay.
Yeah, so we have a $2 million raise that we're executing on right now. There's $500K left for not retail investors, traditional kind of professional investors, and then we allocated $750 of that full raise to our community. And so that's the amount we want to raise on WeFunder, $750 this time. And we do plan to do another one in the future at some point, because honestly, this is part of the company. Like, we want to make sure that our community is invested, that they're engaged. We've found that like people are willing to help, and it's great. Like, I called up one of our investors who he didn't put in a ton of money, but he put in some. And I said, hey, I have these questions about like.
He put it in through WeFunder.
Yeah, and I was like, hey, I have these questions about how you engage with these different groups. So he happened to know a bunch of foundations, and it was great, super helpful. And all of a sudden, like, there's that like touch point of like, hey, I didn't need to go find I didn't need an Andreessen to write me a $2 million check. This dude, like, who I didn't know from, Joe on the street, who just showed up, he gave me like a bunch of really valuable information. And all of a sudden, like, he was stoked to chat and I was stoked, and we had some money. It was great. It's all good.
Yeah. Okay. So thinking about strategy, if I'm putting my startup hat on there in the audience, a lot of people sort of wonder, like, how do you decide how much to raise? Obviously, you went below the limit. You went below the $5 million. How do you decide that at your stage? Why did you go small? Because some people are probably like, hey, give me the full $5 million.
Right.
Explain the rationale and how you chose that.
A lot of it had to do with the amount of dilution that we might experience on our next raise. Right. So we use a tool called Carta, which is super useful. And basically there's tools in there that model out like how much you'll own and whatnot over time. And so there's some red flags that different investors look for at your Series A, which would be like the next round we raise. And they like to see you and the founders own a certain amount of the company.
Yeah. And so let me stop for our audience just a little bit. When you talk about getting dilutive, you want to sell less of the company, right? If the bigger campaign you run, you're basically selling part of your company off at that price, and the company's going to do well, and hopefully your next time you sell a little piece of the company, it's a little bit higher valuation.
Exactly. Yep. So that's exactly why we did that. We said, all right, well, there's two things. We're like, we need to hire some developers. We need to, this is what our burn, and this is how much money we're going to need to spend to do these really exciting things. So we have some huge announcements we're going to be rolling out. If you want to be privy to those as well, definitely get on WeFunder. We have like a Discord community and some other places that you can really start to get tuned in to what we're doing. But, we have all these things we need to accomplish. We know the people we need to accomplish them, and we know how much money we're going to bring in revenue, and we know how much money, like extra money, we're going to need. And so, that was the rationale. But, between that and the dilution, we figured out, all right, this is how much money we need.
Okay, so one of the things that I heard, I actually jumped on your website, and I didn't realize you were doing this. A lot of us think about how we want to be philanthropic as a company, and you're obviously one of those companies that's doing good for society in many, many ways. But I saw something about the women in Afghanistan and how you jumped in to help solve issues there.
Yeah, that's actually one of the really exciting proof of concepts I was talking about, of basically, Afghanistan, everyone knows what's happened there recently, I'm sure.
We pulled out Afghanistan very, very fast, and it left this vacuum in leadership. But basically, the Taliban took over Afghanistan. It's near and dear to my heart because my son spent some time over there.
Yeah, and so not only did like this vacuum of power occur, but also like banking collapse. A lot of bad things happen.
Yeah.
Like there's a lot of bad stuff happening there. And one of the issues though is like, once again, we talk about like, all right, how do you move money into an area like this where all of a sudden the government's not super stable, traditional banking is out, sort of failed. You still maybe want to do like deploy aid, and that's been a problem, right?
You want to give some grant money there.
You might know this, that a lot of the aid that traditionally was going to Afghanistan, which was substantial, like they were getting a substantial amount of aid every year, just froze, right? So all of a sudden there's no more money coming in. And the big reason for that is like the people who are giving money, like, well, the Taliban's in charge now, and they'll probably just take all our money. So why would we do it? How do we do this? And so that's what's really exciting about some of like these tools that we're developing for the future is what we're gonna be doing is we're gonna be onboarding these communities using a variety of tools that allows us to do KYC and AML, which just mean that we know exactly who we're onboarding into this ecosystem. So we know we're not giving it to someone who maybe is not so friendly or shouldn't be using this money or doesn't really need it. We know we're giving it to people who need it. We know it's getting to the people that need it, and we know exactly what's happening with it. And so that's what's really exciting is like we have this project, and I'll actually be speaking a bit about that tomorrow at a conference. We have this project, and then we have a project in some emerging markets in the United States that we're working on to be able to really serve communities that maybe don't have access to traditional banking for whatever reason. Maybe it's that, people just won't open a bank account for them because they don't have the right documentation. And these are all people who could create incredible companies or do incredible things, or further, maybe it's just feeding their families. But like these are people who need resources and simply don't have access to them because we've put all these weird controls in the way. And so decentralized finance and this ecosystem of like Web3 and crypto really presents this like new evolution of how we manage capital, how we manage identity. And so the idea of being able to do like a really reliable on-chain identity where all of a sudden you now have a digital identity that works. Like maybe you didn't have a passport or other things before, but now people know who you are exactly.
How much is all this different than when we talked 3 years ago about before? Because I knew of this. I think at the time we talked about it, maybe it hadn't quite started yet. But you're a fintech company.
Yeah. That's kind of it's been an evolution certainly, and once again it comes from just talking to our customers. Like, what do you need? Like, that's the thing we say that all the time. We're just like, what do you need? And of course, we have to make sure that we're focused on like building out like the fundamentals of the business. And generally we have, as some folks, one of our mentors, Adam Draper, likes to say is like, be firm on the vision, but flexible on the details. And that has been what's driven a lot of this is, we know exactly where we want to go. But the bolts and like other issues and like feature sets and things, those have all arisen because we talked to our customers and said, hey, all of a sudden we have this opportunity, for example, to help all these women in Afghanistan. And all of a sudden we see on the other side, like there's foundations that are also trying to figure that out. And so those are both sides. Those are our people. Like these are the people we were trying to solve things for already. And as we started to do these things, we started to centralize the ecosystems, try to set standards, and then we reach out and say, all right, well, how do we do that? And they say, well, this is how. This is what we need to see. And luckily, we have the tech and the people to be able to build that stuff.
Monique wanted me to ask you about I have it down in my notes, the future of capitalism. Do you see, I mean, obviously things are changing in many ways, but do you have an opinion on where we're going?
Yeah, I mean, personally, personally, I, for example, have moved most of my money into cryptocurrencies. Definitely very much looking at companies and very bullish on folks who are thinking through how to align incentives with larger groups of stakeholders quickly and efficiently. Because I think what we've seen over the last few decades is obviously this concentration of wealth in a few folks. And while that's not necessarily problematic, it does lead to like some problematic things. Mm-hmm. And if you don't start putting like the pieces in place to address those, you're going to have problems. And so I do see it, not only is there a willingness within like the people to try new things and start businesses and build things differently. We see all these people quitting their jobs and like, hey, we're going to just go work at home and do whatever. And like, there's that whole thing happening. But then there's also this very real financial revolution happening where you see inflation going up. You see all kinds of institutional funds starting to buy into assets like Bitcoin and Ethereum. Like there's all this stuff changing. And I think just generally speaking, a lot of like this move towards decentralization it's about like equity and accessibility and like giving people a shot at doing stuff. And like, it's not necessarily like trying to give handouts to people, but they're just trying to like give people a shot. Like, okay,
access.
Like build a business. Sure.
Yeah.
Let's figure out a way to fund more entrepreneurs and see what happens. And I think that's the really exciting thing is like, one of the things that got me pumped up about builders and backers. They do like 5K unrestricted grants to all kinds of people in a lot of communities that typically haven't had access to that kind of capital. And they provide the education so those people know what to do next. Like if they do have a good idea, then they know how to like go raise money or figure out like the capital stack to build their business, whatever it might be. Yeah. And I think that's the really cool thing that's starting to happen. And
well, that education, yeah. I mean, I agree with you so much that there's people that just, well, there's a lot of people where this conversation is a little over their head. We need to break it down. It's a little over my head in some ways, but we have to break it down. But some things that are super basic to you and me, to people who just haven't been exposed to it, they need some education. We have to be able to break it down so that people that didn't grow up and didn't walk in our shoes have access to creating opportunities for themselves.
Yeah. Yeah. And I mean, and that's the really exciting thing, I think. So on this backdrop of like the access to capital and education, you have no code tools. All of a sudden, I just had a friend, he just raised a Series A at a $20 million valuation. He's kicking off $7 million in revenue every year. And he is literally just like not written a line of code. It's all no code tools. Mm-hmm. And so that kind of thing where you could off the shelf go get a tool, build a solution that would make you $7 million in revenue every year. That's incredible.
Well, it's interesting because I'm going to step back from put my economist. I'm not an economist. Put an economist hat on because I watch a lot of CNBC and obviously we're having some inflation right now. But you think about the democratization of innovators, right? Making it easier for innovators to make things more and more efficient. These efficiencies, these innovations are inflation killers, right? They're inflation fighters. So it makes me, a lot of people question whether the Fed waited too long to raise interest rates and stuff. And I don't know any of that, but I know that this kind of stuff is definitely a fighter against inflation and putting people, keeping people from having to do what are maybe the less attractive jobs of society and getting them more into the jobs where you got to really use your brain to do them.
Yeah. I think, and not to wade into any kind of politics, but there's also kind of this hypothesis that's been tossed around by Reid Hoffman and a few others of like, hey, if we had done a better job of investing in middle America and like central, the central part of the United States, and creating more jobs and opportunity for all these people. Do you have like a riot on the 6th, right? Do people even like bother storming the White House if they're all like, happy with like their economic status and the access and opportunities they have? And so you start to think about like, all right, well, here's all this technology, but like, I always laugh because I feel like I live right on the edge of the tech bubble, right? Like when I talk to people about Slack, like you're in the Bay Area, like say Slack, and like everyone knows what that is. But like if you go into like Whole Foods over here, like you might say Slack, and like you might get like a 50% hit, right? Like and so you talk about, and that's just like a basic example of like a very like ubiquitous tool that makes life way easier for a company, and it's just not something that exists over here. Well, and we're not even that far away from the Bay Area.
Right. Okay, so let's talk about this a little bit, because you and we don't have a ton of time left, but you've been one of these people that has been, I guess, involved in the Sacramento entrepreneurial ecosystem, right? We're right down the street from the Bay Area, Silicon Valley, where, right, it's a different sort of way of thinking. These people are, they're startup focused. There's a lot more money there in venture capital. Half of America's venture capital is right down the street. And in Sacramento, we're like a Midwestern town in some ways. But you've been involved in helping the startup community and being involved. You show up. You've been showing up in that way and providing, I don't know, a lot of help to other startups and just words of wisdom and guidance and that kind of thing. With that said, Sacramento, I believe we're emerging. I believe some of these seeds, like with OpenGrants, but even other companies that planted before you guys that have blown up. Mm-hmm. I believe some of those seeds are beginning to bloom, and that Sacramento's entrepreneurial ecosystem is sort of in the process of changing. I want your thoughts, though.
Yeah, no, I fully agree. I think, it's one of the reasons I'm here. It's a really exciting place. And I think there's a lot of opportunity now with even like, you've got Starlink, you've got more connectivity, you've got more companies just starting here. And then I do think like the pandemic also, like I think it accelerated a lot of things. And I think one of the things it accelerated is this like, hey, you can live, our team at OpenGrants is all over the place. They're, one of them lives in Clio, which I don't know if you know where that is, but
I've never heard of it.
The middle of nowhere, but it's in California, but it's way up there. So, we have people in Northern Nevada, we have people in New York, all over. And I think that, Sacramento is just like, people come up here because, you have a really good quality of life, lots of space. It's not crazy expensive as like the Bay Area, but the other thing is, now we have like, there's some funds here. We got Growth Factory. We're super
damn
pumped
right
up about
we do.
that. I love it. No, and we've got funds now. We've got all these different things, and there's starting to be, but even more importantly, there's starting to be this like thought process that the startup kind of process and like the culture is starting to develop. And I think and hope that it'll be unique from the Bay Area, but there's some things that I'm really excited about to see carried over. Mm-hmm. Just the idea of like, hey, this is a way to do business. It's not the only way, but it's a pretty fun way. And, building a good, healthy ecosystem that values iteration and experimentation, I think is really important. And then risk taking, just like do weird stuff, like do wild things, like try to figure it out and see what happens. I think that's the most exciting thing to see.
Starting to become a little bit of a mindset. And I think the infiltration of some of the Bay Area people, but I think just all of us are sort of waking up to the fact that anything is possible. You don't need to go to work for the government or just go do the 8 to 5. Mm-hmm. You don't have to. You can chase a crazy dream and solve a big problem. So 2 final questions. One is, I just want to have you give me your last words on the future of what OpenGrants is. Where are you going? I want to have you get a chance to do that. Anything you didn't say about OpenGrants. But also advice to a person that is inspired by you and maybe would like to consider doing a startup. Maybe they're kind of where you were, a number of years ago.
Yeah, I mean, I think, on the OpenGrants front, our invitation is to the community. Like, come out, go to WeFunder, type in OpenGrants, invest if you want to, check it out, engage with us. We're trying to build something for the public. There's a lot of your tax dollars on there. That's all I'm saying. So you might as well come get some of it.
Back.
Yeah, exactly. The other thing, though, I think more importantly is there is, an unprecedented opportunity, I think, for entrepreneurs right now. There's there's more problems. There's so many problems in the world to fix, and people need things. And you as an entrepreneur have the opportunity to build with, like, if you don't know how to code, there's no code tools. If you don't know how to fundraise, you can literally just learn how to do that on YouTube or wherever else. Like, there's so many resources, and there's resources in this ecosystem here. There's resources available online. And if you don't have access, you could go to a library, which, hey, guess what? I spent so much time in libraries while I traveled around. It was like, there's what I used as co-working spaces before co-working spaces were like a thing. Libraries are amazing. So, but I think, just go do it, right? Like, that's, I mean, the amount of times I sat in like the back of an Uber or a Lyft and had some Uber driver tell me that they had the idea for X, right? They're like, yeah, I thought of Uber before Uber. I was like, yeah, but guess who didn't build it? You. like I don't know what else to tell you, man. There's a hard truth here.
Coulda,
like,
woulda, shoulda. Yes. I hope, anybody that's out there listening, I love this because don't have those regrets. Don't have those coulda, woulda, shoulda moments. If you have a good idea, tell somebody, go to the library. I love that. That's the first time that's ever come up on the show. I've been doing the show a long time. Go to the library.
Yeah, there's literally like federally funded, and I do want to bring this up. So this saying of like, hey, you should have built that. There's a lot of like, I've experienced a lot of really good like and lucky things, but also good things in my life. Very, very privileged in that sense. And I understand that like a lot of people don't come from necessarily that same background, but there are a lot of resources. And if you want to like put in the time, like I'm not saying that I didn't work hard, but definitely had some privileges as well. But there's public libraries. There's the SBDC. We have the Tech Futures group of the SBDC here, which just to like describe them, they are a group that's funded by the federal government to help you for free start your business. Yeah. So like if you think like you don't have the resources, there's like a huge just bevy of really good free resources for you. And you really can get started, even if you don't think you can. So go do it and like figure it out.
Go do it, figure it out. You can do it. Sedale, I want to thank you for coming on the show. Thank you for partnering up with me on the Growth Factory. The best is yet to come.
100%. Thank you for having me. This is awesome. Super excited about what's coming next.
Welcome back to the Mark Haney Show. I hope you enjoyed the show today with Sedale Turbovsky and OpenGrants. And OpenGrants is just one of the companies that we've invested into at the Growth Factory. We're going to invest into 100 companies over the next 4 years. We recently invested into 15. We're running them through our accelerator, which is like a boot camp for startups. And we're making investments financially. But that's going to continue to happen. So if you want more interest, if you're a founder and you have interest in getting involved, you can go to growthfactory.us and you can find out about our next cohort, which is going to be launching in the spring. Well, this is a 12-month program. Sedale and the other people that we've invested into are going to continue down their path, but we are going to start a new cohort coming up in the spring. So go to growthfactory.us if you want more information. So to all you out there fighting the good fight for our freedom, for our security, and our way of life, and to all you fighting the good fight out there for entrepreneurship, at the Growth Factory and at Haney Biz, we're never above you. We're never below you. We're always by your side. Thanks for watching today's show. My goal for every episode is that you find a takeaway, something tangible you can use in your business today. And if you have a comment about a favorite takeaway, feel free to put it in the box below. And if you have a topic that you'd like me to bring up on the show, don't forget to let me know. And also, don't forget to subscribe to our YouTube channel if you want to learn more about entrepreneurship. Because at Haney Biz, we are always by your side.